wanted to come on here and talk about some effective strategies for paying off your credit card debt. First of all, you need to like, subscribe this video if you get value from my videos, because I am trying to bring practical application to financial literacy to your life, and I hope it's helpful to you. But how to pay off debts, or I suppose credit cards, more effectively. It's interesting because I myself have struggled with credit card debt from the time I was 18 when I got my first credit card, and not realizing the impact until I actually started to work for a bank of how your credit history, including, how you pay off your credit cards, can impact your ability to get a mortgage one day or a car loan one day when you really want it. And some of the things that I saw as an ex-banker on how people use their credit cards really just opened up my eyes to how I used my credit card. And you know what? Some of you guys might relate to what I'm going to talk about now. But do you find that when you have a credit card, especially for those of you guys who keep a balance, maybe your balance is in the thousands and you just don't see it going down? You make these huge payments onto your credit cards every paycheck, and then it just doesn't seem to budge. Okay, there are a couple of reasons why, and I can almost guarantee you it's one of these two reasons, if not a combination. But the first real obvious is that you're only paying your minimum payment. Now, that's not much of a big payment, but listen to me. If you don't see your credit card balances going down at all, it's because you are paying just the minimum payment. Now, the minimum payment could be one of two things, okay? If your minimum payment is at least 3% of the average statement balance, then you know that you're going to be seeing it come down. Your balance should be coming down, okay? But if it's anything less than that, let's say that you owe $10,000, okay? And let's say that your minimum payment is like $100. That's not an indication that you have a good rate on your credit card. That's an indication that your bank or your credit card company is only asking for interest. So if you only pay off interest every month on your credit card, then can you understand why you're never going to see your balance come down? Okay, now an easy way to calculate this, guys, is really just take what the minimum payment is and see if that's anything less than 3% of your previous statement's balance. I should say the statement's balance. Because if it's anything less than 3%, then you know your bank is only charging you interest. A lot of people used to think they had a great rate on their credit card because they said, oh, well, my payment's only $100, so it's a really good rate. And then you take a look at their credit card statement and it's the same 25% interest rate like on any other credit card. And you show them like, your rate is actually 25%, so it's not considered the low rate version. And they're usually surprised. Why are my payments only $100, for instance? Because they're only asking for interest. And that's when they clue in and they say, oh, that's why I don't see it going down. Yeah. So that would be the most obvious kind of reason why you don't see your credit card balance coming down. One other one that could highlight that as well is if you look at your credit card statement, there is going to be a little statement somewhere on that 3-4 page statement that tells you if you continue to make these minimum payments on your credit card, it's going to take you 300 years to pay it off. I have no word of a lie seen that on credit card statements. 300 years. Not 300 months, 300 years. So that should give you a really big clue that you're never going to have it paid off, right? That's because if you're only going to pay interest, then you're literally not going to get it paid off. The second reason why you probably don't see your credit card balance coming down is for those of you guys who make these large balance payments. Let's say you put $1,000 every paycheck onto your credit card, but every month it just seems like you're not getting that balance down. Is because you have no more cash at the end of your paycheck to buy all the other things like food, gas, Maybe your utilities are automatically deducted from your credit card. Obviously, you're going into your credit card while you're making these large payments. And really, in essence, all you're doing is just putting the cash onto the credit card before you spend it again. And that's why you don't see your balance coming down. Now, we're not here to talk about all the different ineffective ways of paying off your credit cards. We're here to talk about the effective ways of paying off your credit card. So the first thing you need to do is lay out all your required necessary expenses, okay? And I'm not talking about just the ones on your credit card that you use, like food and gas, but I'm talking about all of the things that you have to pay for, okay? Whether they're on your credit card or not. You're gonna put those all down. You're gonna write out all the expenses. And you're gonna look at your credit card and see which of these expenses are actually charged on your credit card, okay? So in your case, it might be the groceries, or like I said, the gas in your car. And you're probably thinking, you want to use my credit card because I get these points, and then every time I get these points, I can get a grocery shop, or I get to fly free every year because I use this so much. That's fine, that's totally fine. Except don't use your credit card and keep the balance on there. Pay with cash onto your credit card what you would have otherwise paid if it came out of your debit card, or your bank card, I should say, or cash, okay? Because in that way, you know you're not going to keep that balance on there. So I'll give you a really good example. What I do is on payday, if I know that I'm going to spend $200 in groceries every week, on payday, I prepay my credit card $200 because I know I'm going to use my credit card to pay for groceries. I'm not going to take out $200 cash and pay for groceries. That's just more convenience for me. And plus I get the air miles. But I already know that the money is there because I prepaid it. But on top of that, in order to see my credit card balance come down, I also make an extra payment based on 3% of the outstanding balance. So I know that I'm actually slowly knocking down my credit card balance because I've already prepaid for the things I know I spend money on my credit card, like my groceries. I've already prepaid that, but I'm also making payments like it's a loan, right? You understand loan. With a loan, you have a fixed term to pay it off. You make these regular monthly payments onto it, and eventually the loan is done, right? So that's how I make my payments onto my credit cards. In addition to prepaying it for things like food and gas in the car. Same thing with pre-authorized payments. If I know that Apple is going to take $1.50 off my credit card to pay for iTunes, I don't even know what it is, but then I know that I'm going to prepay $1.50 every month for that Apple charge. So that's one strategy you definitely can use. The other strategy is pretty simple. Just prepay 3% of your outstanding balance onto your credit card, and then take one of these and cut up your credit card so you don't use it, okay? Because that's the only other way to pay off your credit card and finally be done with it, is to pay it off and not use it again, okay? That's the only other way. Those are two effective ways. Now, some people might say, why don't you go to the bank and get a loan and pay it off? I'm like, I have a little problem with that, depending on the person who's doing that, okay? The problem with that, and this is coming from a banker who saw that very regularly, the problem with that is that you don't fix the habit of using your credit card the way you have. You literally just have a Band-Aid solution that you pay off this credit card with one big loan. So that debt doesn't go away, it just moves from one pot to another. Now this pot is basically, you're paying it off, and eventually in 5 years that pot will be paid off. But then what about this empty pot where you don't have a balance anymore? Most people I should say, they get seduced by the idea of using it again because it's clear, right? It's zero balance. and they use it because something emergent happens. Like, no word of a lie. Back in hope, and things were really good. I forget what year that was. I want to say 2003, 2002, when borrowing money, especially against the equity of your house here in Canada, was really popular for whatever reason. You can use it for paying off debts. You can use it to buy another house. You can use equity in your house to do that. But no word of a lie, when people would try to refinance or get a consolidation loan to pay off their credit cards, but then they make the mistake of using their credit cards again, and then they rack up another balance. And then they would come back in months even and say, oh, Irene, stupid me. There was an emergency, we had to pay for this and we had to pay for that, or there was just a really good deal to go to Mexico. We just couldn't really say no. And then of course we got out of hand with our vacation. So I need you to do that thing you did before. Can we just roll this into our mortgage again? Or can we just consolidate this into that line of credit you got us before? And it was really fast that I realized that I wasn't helping anybody. I was just really repackaging their debt. Yeah, maybe they were saving on interest, but at the end of the day, not really, because they just had debts in different forms. And that is definitely not a strategy, taking that strategy and kind of repackaging it. Now, in some cases, it might be the most attractive strategy, which is fine. But in my experience, it doesn't fix the actual underlying problem of using credit cards like income. And that's the biggest thing, is people are just used to using it as income, as their emergency fund even. Oh, I have some stuff. Like, I'm no stranger to that, okay? I'm not at all passing judgment right now. I am speaking from experience myself. And if I could give that to you so you understand that I know the error of my ways and the ways of the clients I dealt with for over 25 years, we have to fix the problem so it doesn't happen again. Another strategy that someone might entertain, another Band-Aid strategy, which again, I'm no stranger to. Another Band-Aid strategy is taking their savings that they've saved for decades, even for their retirement. So RSPs in Canada, their 401ks in the US, I guess would be, they would take that and apply it to their debt, because it would just be like, oh, I just can't stand debt. Can we just apply this and I just won't use it again? Again, it doesn't take care of the problem. It just kind of Band-Aid solutions it until the urge to want to use the credit card again comes up again. And then in the meantime, what you've done is you've used up all your savings with the penalties and the taxes that have come out of that, and you've lost out on the opportunity to invest it in something that could be making you money for your future self. That's another strategy that, yes, I suppose it exists, but it's not necessarily the best strategy. If you can handle understanding that you got yourself into the debt and now it's your job to get out of the debt, then you were going to fix the problem of utilizing the debt when you have the cash. Okay, so I hope that gave you value and insight as to maybe how you might be using your credit cards, because we can blame all the banks all we want, the credit card companies, about how their fees are so expensive or their interest rate is so expensive. But at the end of the day, they're not forcing you to use it. You're utilizing it like some sort of cash grab, and that's fine. That's what we were introduced to credit cards, so that we can buy the things now that we want without having to save for it. But what you might want to do is just shorten the time that you have to actually pay it off. Your income is not going to be unlimited. One day you will have to stop working. One day you may not have a job. One day you might need money for bigger emergencies. And how awful would it be that if you have a big emergency and your credit card's maxed, that you can't even take care of the actual emergency? Okay, so I hope that helped with the effective strategies with credit cards. And again, this is not a judgment. This is more or less, I know you, I feel you, I understand you, I've been there, I'm there. And if I can give you some insight as to how to fix the actual problem, I'm there for you. Anyways, I got you all.